Hello and welcome to another Bosisco investing video. In this video, we will review the top 10 stocks that traded Tuesday, June the 16th on the Toronto Stock Exchange, then move on to the top 10 stocks on Wednesday, June the 17th. These are usually the stocks that interest me the most and will be reviewed in the coming months. I believe in buying stocks that have a broad market exposure. Next, we will look at why resource stocks are attractive. Then, select a gold stock for review. The mining sector could be a big winner this year. So today, let's go for the gold. Now, before we begin, I need to remind you that all videos are provided for informational purposes only. Nothing contained herein should be construed as an offer, solicitation, or recommendation to buy or sell any investment or security, or to provide you with an investment strategy. Nor is this intended to be relied upon as the basis for making any purchase, sale, or investment decision regarding any security. Rather, this merely expresses my opinion, which is based on information obtained from sources believed to be accurate and reliable. In full disclosure, I will indicate if I own, plan to buy, or sell any stock that I may be holding. You as an individual should do your own research. Now, let's move on to discuss the stock market. Now, we are looking at a table of the top 10 stocks at the close of business on Tuesday, June the 16th. The top stocks here are based on the trading volume at the close of the market. Now, one thing that is needed on this chart are labels for the stock symbols. So let's put these on the table. Let's look at the organization of this table. At the top, we see that this is only the trading on the Toronto Stock Exchange, TSX. As these stocks trade on multiple exchanges, we are not seeing the full picture. For our purposes, this information is sufficient. Down the side, we have the symbols and names of the stocks traded. Across the top of the table, we have the last or closing price, the amount the stock changed from the previous day's closing price, the percentage change today from yesterday. Green here indicates that the price closed up for the day, and red tells us the stock closed down. In the last column, we have the total volume of the trades placed today. Looking at this table, we find some interesting information useful to us in selecting stocks to study. The highest trading stock, Bombardier, has now become a penny stock after financial problems. We will see this stock again on Wednesday's list. Bombardier shares have lost 74% of their value this year and hasn't traded above $1 since March the 3rd. Bombardier is being dropped from the S&P TSX Composite Index in the latest blow for the beleaguered plane and train maker. As of last Friday, 15 of 17 analysts who cover Bombardier had hold recommendations on the stock, with the remaining two split between one buy and a sell. The analyst consensus 12-month price target is 61 cents per share. Bombardier will also join BlackBerry Limited in being dropped from the TSX 60 index on June the 22nd. Next, we see that oil stocks are prominent, and some of these are ones that I will want to look at in another video. Oil stocks on the list are Canadian Natural Resources, Baytex Energy, which I have traded in the past, Cenovus Energy, and Suncor, which Warren Buffett has a holding. Another popular stock with traders is Air Canada. There is one junior gold stock on this list, Free Gold Ventures. It has generated a lot of interest in the last 3 days. Again, on this chart for Wednesday, June the 17th, some popular names from yesterday again appear. There's Bombardier, Canadian Natural Resources, Free Gold Ventures, Suncor, Baytex, and Air Canada. Interesting enough, there are two gold stocks here. One that I'm interested in is B2Gold Corp, and there's one cannabis stock here that's been in the news, Hexo Corp. Wednesday saw Bombardier again the top trading stock of the day. Canadian Natural Resources, Freehold Gold, Suncor, Baytex Energy again made the top 10 lists. Two new stocks on the list are Air Canada and B2Gold. B2Gold Corp is a stock that joins my list of gold stocks to consider for buying. XIU rounds out the list at spot 10. This ETF would be suitable for smaller accounts and for those who are starting to invest. The top 10 active stocks for Thursday, June the 18th are shown on this list. Again, we see some of the same stocks from the 2 previous days. On this list, I would note that 2 banks appear, TD Bank and BNS, Bank of Nova Scotia. These we would put on our list of financial stocks to review for buying, as they are 2 names that should be considered for one's portfolio. This last table shows the top 10 volume stocks for Friday, June the 19th. The usual names from earlier this week again appear in the top 10. Bombardier and BlackBerry are high volume stocks today as portfolio managers sell the stock, as this is the last day in the 2 indexes. As to note from the S&P Dow Jones Indices LLC, as a result of the quarterly review, S&P Dow Jones Indices will make the following changes in the S&P TSX Composite Index and the S&P TSX 60 Index prior to the open of trading on Monday, June the 22nd, 2020. Now, I find this a bit interesting. S&P Dow Jones Indices is a division of S&P Global, and it trades on the New York Stock Exchange under the symbol SPGI, and it indicates here that it provides essential intelligence for individuals, companies, and governments to make decisions with confidence. That's an interesting statement. Now, you may ask, why am I showing you these tables? Well, you can go on your favorite finance website and look up the top trading stocks each day. They are also reported on television newscasts and also on the radio. Now, if you look at these top 10 stocks, this will give you a heads up of what stocks will be in my next video. It will hopefully get you to study a few stocks and get to know their fundamentals, and you can get acquainted with their charts. I'm thinking of putting up a short video of maybe 2 to 3 minutes during the week with this table and commenting on the top 10. Then, if you have questions about the stock or chart, you can leave your questions in the comments section below the video. This will give me an idea of what to discuss in the Saturday weekly video. Now, this next chart is the Toronto Stock Exchange Composite Index. This is not a stock you can buy directly, but there are some ETFs, exchange-traded funds, that you can buy that replicate this index. Now, Warren Buffett would say that if you want to do better than a mutual fund or have no interest in buying and selling individual stocks on your own, what I want to note on this chart is that trading takes place around the world and can affect the opening prices at 9:30 a.m. on the Toronto Stock Exchange. On this chart, we can see several times when the closing price and the opening price the next day have a significant difference, something to keep in mind when you buy stocks. You may not always be able to sell or buy at the price you are targeting. The chart also shows that the index was not very volatile the last 3 trading sessions. This might indicate that the market could make a major move up or down in the coming weeks. My opinion, without further study, is that we could see the market heading down again. Patience is important now. We cannot force the market to do our bidding. A weekly chart, such as this one, gives us an indication of the fluctuation of prices during the trading day. If you are a long-term trader, these charts will be of no interest to you. Day and swing traders will use these charts as well as technical indicators to plan their trades. These charts would have more detail than this one if you're a day trader. I am not a day trader, so I will not go into more detail here. In the next table, we will take a look at commodities that I like to track each day. Here is a table of commodities that are important to me in looking at the resource sector. We have here what I refer to as the Olympic medal winners: gold, silver, and what? No bronze? Well, copper will have to take its place of the 3. I would say that copper is the most important one. In fact, it is often called Dr. Copper. We will look at why copper is so important in a separate video, and we will go into the details. Next on the list is crude oil, which has been in the news recently for crashing in the futures market. It went below 0 in value, and it ended up that if you had a futures contract at expiry, you had to pay someone to take it off your hands. My advice is to stay away from futures trading, something that I have never done and don't plan to do in the future. Last on the list is natural gas. Well, it gets no love from me, and it's not a commodity that I have an interest in. This next table shows the prices of these commodities on Wednesday. This week, the prices have not been as volatile as past weeks. My only comment on this table is that I have a feeling that the market is waiting for something big to happen, and that will move the market. For now, I am neutral on the lookout for a price move. But as you will see in part 2 of this video, I have started a small position in buying a gold stock. This next table shows the price of these commodities on Thursday, June the 18th. Copper and crude oil had significant gains in their prices. Gold, which I am watching, did not move significantly. This week I was looking for the gold price to go down. I am not sure that I am able to do that with my superpowers. And lastly, we have the table for Friday this week. Oil decided to join the party and moved up, as well as both gold and silver, which made large moves. Oh boy, I was looking for gold, silver, and oil to go down. I guess I will have to be patient and to add to my gold stocks later. Now, traders showed very little love for copper as it ended the week flat on the day. Now, I want to provide some of my expectations for owning stocks. In general, there are 2 classifications of the type of stocks to hold. Now, I am just trying to keep this discussion in this video to the basics. I'm keeping this to the KISS principle. Keep it super simple. Now, older people such as myself would be advised to stick to value stocks. In this example, the aim is to achieve a 9% annual return. Now here I'm setting 2% as the expected annual inflation. This is in line with the goal of the central banks around the world. With this approach, we are putting dividend returns as the primary increase in growth, with capital gains providing a further 4%. Now, a younger person would be most interested in the reverse, getting lower dividends and relying more on capital appreciation. There are some interesting tax implications with this strategy. Now, this gives me an opportunity to create another video in the future. Now, in my case, I have both strategies for my investment goals. Now, I want to look at a very interesting chart that illustrates the rates of returns for various investments. This chart shows the average yearly returns over a number of categories. At the far right of the chart, we see the average return of investors. At 1.9%, I was surprised at this low number, maybe more shocked than surprised. Remember the 2% inflation rate that I was showing in the previous chart? Here we see that over the last 20 years, inflation has averaged 2.2%. I must admit, I'm skeptical that this is accurate, but that's me. The next column shows the return for your home. I assume this is for individuals who do not rent part of their home for income. The next column threw me. What is EAFE? Well, the EAFE index is a stock market index that is designed to measure the equity market performance of developed markets outside of the US and Canada. Bonds, which are considered very conservative, return 4.5%. Now, I should note that if we subtract the inflation figure, I would assume you would have netted 2.3% holding bonds. The next 2 columns, 60-40 and 40-60, is a mix of stocks and bonds. The 60/40 portfolio would hold 60% stocks and bonds in the other 40%. This shows that holding stocks at any age will improve returns. The next column shows that Warren Buffett's recommendation to hold a fund that replicates the S&P index is a viable and worry-free investment. Well, I should not say that given what happened in March of this year. But over the long term, even with possible crashes, you can still get ahead of most of the investments to the right. Lastly, I won't dwell too much on the next three columns because I think you are getting the idea of what we are looking at here. This chart shows that resource stocks are a sector to be considered for owning. I should warn you, though, that these figures are a bit misleading, as resource stocks can go up fast and then go down even faster, so beware. The last column shows REITs to be one of the best performers over 20 years. I think I would not expect this performance over the next 20 years. I think some major changes are on the way. Now, if you're not familiar with REITs, this is real estate investment trusts. One component that I would have expected on this chart was the technology sector. Now, you might be wondering why I'm recommending stocks in the resource center. One reason is that there are fewer mine discoveries. Secondly, consumption of the metals is always increasing from industrial production. Also, environmentalists are pushing back on new mines being opened. Merger and amalgamations are resulting in a few large companies. So this would mean that there are less opportunities for investment, which means that the supply of companies is reduced. And if there is demand, it means that stock prices could inflate. Now, with automation, these mining companies become more efficient, and the more efficient they are able to reduce their costs and to increase their margins and profit. Now, as I was midway through producing this video, I belong to a blog, and I often comment on that blog about mining stocks, and I use charts. And one of the bloggers on that site said, if you're going to create videos on YouTube, use lots of charts. But this first introduction segment, part 1, had no charts, so I had to redo this video to include one. This is a shout out to Kyle. Because of you, I spent some time searching for this chart, and I put it in the video. So let's go to the next slide here. Now, this is a sample chart I posted on our website on May the 20th. And if we look at the upper right corner, I know this is not probably very clear in this video, but this is Teck Resources Limited Class B voting shares that trade on the Toronto Stock Exchange. In the upper left corner, there's an indicator that there was a gap that day, which meant that the stock traded up from the closing price of the previous day. And now, when you do get a gap, sometimes you see that it's going to go back down to fill the gap. And here I put a note that the gap may fill towards $10 and should allow another opportunity to buy or add to a position. Now, I should indicate that I do own this stock. Now, if we look at the triangles here, we see there's a whole bunch of them all through here. And the green triangles are buy flags in the software that I'm using. And it's indicating according to the MACD technical indicator, plus the Bollinger Band formula that I use. I combine them together to create a function, which gives me a numerical result. Now, this would only give me a possible buy, as the markets can turn on you in reverse. To me, these flags are a tell that there are buyers in the market buying the stock. Now, if you look at the lower right corner, you can see I put in that $10 Canadian would possibly be a new support area. And if we look at the month of March, when the market crashed, that this stock was already trending down from the month of May, which is shown on the left side of this chart. So when I see a downward trading stock of this nature, I tend to stay away from buying, because to me it indicates that there is something troubling the people holding this stock. And I don't place a lot of emphasis on fundamental analysis. You'll notice that in the future videos, because I feel that the income statements or the balance sheets can be manipulated. And certainly a company, once they're income statement and balance sheets look as best as they can. But we know that companies often restate prior years' data, or their balance sheets, or their income statements. And of course, when that happens and it's a negative effect, the stocks go down. But anyways, back to this chart. I noticed that there were a number of green triangles or flags at in the month of March when the market crashed. And of course, I put in the support at $10 Canadian. Now we see in the bottom right corner that the stock did trade back to $10 in April and then bounce back up. So the triangles did give me an indication that there was a possible future benefit in owning this stock. Now, in my plan, if the stocks didn't hold that $10 support and went down, I probably would sell the stock and take my loss. But I'll get more into these videos in the future. It's hard to go over a chart when it's in the past, and I know what happened in the future. You might want to take a look at Teck Resources on a website. If you find these videos interesting, please click the like button and click the subscribe button for more great interesting videos. To get notifications, ring that bell. And lastly, if you have any questions or suggestions, leave a comment.